Bible verses for motivation. And whatsoever ye do, do it heartily, as to the Lord, and not unto men. Therefore, my beloved brethren, be ye steadfast, unmovable, always abounding in the work of the Lord, for as much as ye know that your labor is not in vain in the Lord. Trust in the Lord with all thine heart, and lean not unto thine own understanding. The righteous cry, and the Lord heareth and delivereth them out of all their troubles. But Jesus beheld them, and said unto them, With men this is impossible, but with God all things are possible. And he said unto me, My grace is sufficient for thee, for my strength is made perfect in weakness. Most gladly, therefore, will I rather glory in my infirmities, that the power of Christ may rest upon me. Not slothful in business, fervent in spirit, serving the Lord. Take heed that ye do not your alms before men, to be seen of them. Otherwise ye have no reward of your Father which is in heaven. I would they were even cut off which trouble you. What? Know ye not that your body is the temple of the Holy Ghost, which is in you, which ye have of God, and ye are not your own? But my God shall supply all your need, according to his riches and glory, by Christ Jesus. Be not deceived. God is not mocked. For whatsoever a man soweth, that shall he also reap.
All right. Good morning, everybody. Hope you guys have had a good Sunday so far and a good weekend. Hope you guys didn't hurt yourself last week. But yeah, let's hop on and look at what's going on. So next week is an NFP week. So NFP protocol. So this, in the last month or so, we've talked about the holiday protocol. So now let's kind of talk about the NFP/FOMC protocol for risk control. So when it comes to NFP, of course, the first beginning of the week is generally going to be the best because that's ahead of obviously the NFP rate, the announcement. Expect this week to be a little shaky because, for one, it's the start of the month. On top of the fact that it's NFP, and we're going into the summer months. Okay, we're going to talk about seasonality a little bit. We're going to discuss a lot of stuff today. So yeah, take note of the process. This is going to be our monthly analysis, and yeah, we're going to do enough to, give you an effective process. I talk about this a good amount, but each time frame or perspective has a specific process, whether it's from the monthly, weekly, daily, even the quarterly perspective also has a little process that's repeatable. It's not random, nothing's random. So yeah. So the start of the month or start of the week, Monday and Tuesday should, send a decent amount of fireworks. If it doesn't, if it consolidates going through the overall week, right, from today to Tuesday, if it's not really doing much, then it's going to be pretty clear that it's probably going to be a Thursday reversal, or it's just simply going to be waiting for the news to come out to make a decision as far as what it's trying to do. Okay, nothing has changed in the overall idea that we've been looking for in terms of price going higher. Those of you that are new, potentially, we have actually called NASDAQ from the low it formed. Let me actually go to the monthly chart. We called NASDAQ from this monthly low here. It was pretty spectacular how price delivered. You could just go back and look at the live calls from April 1st, and prior to that, you'll see that we've been pretty much in tune with everything, and all the stuff that we've been talking about has just beautifully came to fruition 75 to 80% of the time, just throughout the whole year so far. You don't have to take my word for it. You could just go look and visually see some of the things that we've talked about and how they've came to fruition. Okay, let me actually set some of this stuff up. I thought I had everything situated, but I guess not. Yeah, it's the same with the currencies as well. We've called the currencies pretty amazingly. This was a market maker buy model. Okay. And yeah, so we basically called this all the way up. We called this as well, this wick to be respected, the midpoint of that, or the midpoint of the wick, and then of course the volume imbalance, inversion, fair value gap. And now we've gotten up above, and if we go to the monthly, we can see that that's a monthly bullish breaker. And it's still continuing to deliver. So I'm going to keep my expectations towards more of the buy side if everything stays the way that it is, right? With DXY falling and indices rallying. Hopefully we could see the bonds and yields start to correlate with the overall indices and the DXY. It's been a cracking correlation since the start of the year. So like this has been going higher, the yields have been manipulated, getting pushed higher, while the DXY has not been doing anything like that. So yeah, we'll discuss that. Let me just get this all situated. Currency, monthly. I hope you guys have had a good week, good weekend also, like I said. It's definitely been a spectacular start to the year. Definitely has been the best I've personally had, and some of my students have had since I started trading, right? Or just since I became profitable and started understanding what was taking place. So yeah, some of you guys on YouTube too have been telling me the same too. So. Let's see, so yeah, I'll keep that. So yeah, so we have pretty much been identifying, again, like I mentioned, this going higher. Every single indice has been rallying. We do see that we have had this failure swing, and of course that led to price giving a pretty decent retracement, which basically took us to this volume imbalance in here after we took this high. All right, so this is a weekly chart. If we move to the monthly, let's go take a look at that. Okay, so we've came back into this order block. You could even use this order block if you wanted to. It's pretty much hit that and then rejected slightly. So the month last month was bullish. Today, obviously, when we open up, it's going to start a new monthly candle. So you want to think of power 3. Okay, very important element here. If you think of power 3, and you take that to the monthly chart. Anytime a new month starts, anytime a new quarter starts, which you can observe using a 3-month candle or a 3-month time frame, every time a new quarter starts, this month is going to be a new quarter. Okay, so I believe, let me double check real quick. So we're going to have to talk about that as well, quarterly process. Let me see. Whoops. So yeah, if you look at this real quick, right up in here, you want to screenshot that. Okay, so there's going to be a new quarter. We're inside of a new month. So this process we're going to do today, as I've began touching on, it's very repeatable. There's quarterly, monthly, weekly, daily processes that are very repeatable. Obviously, the higher time frame takes time, so you don't have to do it every single day. Okay, like you do want to do it though, and get a process for this because, for one, most people don't have this understood. Most people don't have a process for each perspective. They just want to look for an entry, and it's retarded. Okay, and they think that they're just going to be profitable just by doing that, and or like just focusing on the entry, and it's just not how things go. And then aside from the processes, you also need risk and all these other things understood. But this specific process here, in terms of when the quarterly changes take place, it's very important to keep an eye on this because, for one, you got to switch your contract month to get into the most liquid asset or the most liquid contract, unless you're trading the continuous contract in the asset you're trading. But ICT has mentioned that if you trade the continuous contract, and because you're lazy and you don't want to go use the other contract months each individually, well, you're gonna miss specific gaps in price that are not like visually there on the continuous chart. So there's plus and minuses, I guess you could say, like positives and negatives. Positive for the continuous contracts is obviously going to be that you don't have to change the contract month. You could just stick to whatever it's showing you there. The negative is obviously missing certain contextual ideas like gaps and things that are present that other traders I see, and it could kind of mess you up. So of course you're going to make your own decision. If you do choose to not use contract months and you just want to do the continuous, so be it. Just keep in mind that you may be missing a part of the equation if you are going to trade futures. Okay, so yeah. So again, we're in a new month, NFP protocol, okay? And then we're also on the 16th of this month, we're going to go into the third quarter. So when we go into a new quarter, obviously you want to first and foremost keep tabs as far as when that's going to take place so you could switch the contract month. But you also want to make sure that you're doing this type of higher time frame analysis we're going to get into in a little bit, because when a new quarter comes in, the way that you gauge quarterly shifts is by seeking SMT going into a new quarter, okay? Because if you could see an SMT on like the monthly, or an SMT on the quarterly chart, or an SMT on the weekly or daily chart, and price has been one-sided, a lot of times, especially if a new month is starting, like we're going into June, if that's present, an SMT going into a quarterly adjustment or a quarterly change, a lot of times power 3 will kick in, okay? Because remember, it's on the quarterly chart, it's on the yearly chart, it's on the weekly, daily, monthly charts. So keeping tabs on this is super important, because when the new quarter starts or the new month starts and you're thinking power 3, you're able to then go in there and think, okay, I may be bullish or I may be bearish on the higher time frame, but when the quarter starts or when the month starts or the new week starts, my anticipation is for the first span of weeks, or if it's a weekly, first couple of days, I'm going to anticipate it going against me. So you're not going to go in there and be so gun-ho about just taking a buy if you're bullish or taking a sell if you're bearish. Okay? You're going to wait to see it go against you and then see if there's like a PD array of some kind or a liquidity pool of some kind or an SMT of some kind at a level that could promote price expanding in the direction you're looking to see it expanded. Okay, so if you guys have any questions throughout this call, it's going to be very important that you ask them. Just leave them in the comments, because if you miss any elements to this, I mean, you could be missing a big part of the picture, because this isn't just our daily analysis. This is the foundational analysis concept that's going to assist you in learning how to gauge bias and narrative for weeks, sometimes months, sometimes quarterly in advance. Okay, so you're not flip-flopping back and forth like, oh, I don't know. You're going to be able to know exactly what the higher time frame is showing. So if the lower time frames opposed to the higher ones are going against that, you're not going to be swayed. Your logic and mindset is not going to be racing to force something. Okay, you're gonna be forced to wait. Okay, it's gonna make you wait. Because if you don't wait, people like me are gonna come in there and victimize you. People like ICT and any of the other charter students that understand this, I mean, they're gonna be able to eat off you, and you don't want to be a victim. You're either gonna be an apex predator, or you're going to get blown away. Okay, so you got to work your way to being an apex predator, and this is part of the process in terms of getting there. Okay, again, it's not all about entries. It's not all about one thing or another. Trading is a multifaceted skill set, from mindset, expectation setting, to risk management, entry and targeting, bias and narrative, and everything else in between. Okay, so again, we're going into a new quarter. It's a new month. That means that because there's NFP also, we're expecting power 3 for the monthly perspective, new quarter also, but we're also going to anticipate price going against us. We're also in this specific time going to expect that price is potentially not going to do anything. If it's in consolidation, wait for it to expand out. Okay, because especially since we're going into a new quarter, because it could continue to rally. It could continue to rally going into NFP, hit NFP, and then move into the new quarter, which is going to start on the 16th, and then all of a sudden it could turn around and go against you dramatically, and that could have just been a power 3 manipulation. Okay, so again, we're going to monitor this stuff. You're going to be informed if you pay attention and you spend time here. But yeah, I wanted to make this very, very apparent and in terms of importance on like your top 5 priority list. Okay, so keep in mind June 16th. We could also get into the up to data ranges. I'm not sure if a lot of you guys are at that level yet. Some of my private community students are. We've talked about this over the last year, and it's been pretty incredible. But just let me know if you're at that level where that would be something worthwhile to you, if you've studied that at all. If not, I'm not going to waste my time and just dump that on you, because there's other battles that are more important than certain topics. Okay, but yeah, just definitely let me know in the chat what you guys need help on, or if anything I talk about today confuses you. And yeah, we'll dissect that and continue to march through the monthly, quarterly, weekly, and daily analysis today. Okay, the whole process as a whole. All right, so yeah, again, screenshot this if you haven't already, and we will move on to bonds and yields. Okay, so let's start at the yields real quick. Let's look at the quarterly time frame. Let's actually take that off. Okay, let's observe the lows here. So I do see that there's SMT here between the previous quarter and the current quarter. It's been a mess, right? Overall, it's just been a mess since January of 2024 in terms of the interest rates, specifically in this case the bonds, the yields, the bonds. Okay, so remember, this impacts what the foreign currencies are going to do, or it influences what they're going to do. It influences what the indices are going to do. So that's why we start here. A lot of people give me the question of why don't you just jump to DXY? Why don't you just jump to this or that? Well, first of all, I have my process, and I'm not going to deviate just because you want something. Okay, and second of all, this is something that will give you back-end information. You want to have the most educated or powerful information possible to stack on top of whatever analysis you're doing for whatever asset you're going to trade, right? And that's just kind of common sense if you think about it, because you want to know everything about the decision-making process. And this is why we start here, because this is heavily influential. Okay, so given the fact that price has been still sideways, we do have that SMT, so we're going to mark that, right? We're going to keep that in mind. just in case, this wants to continue raging higher, or, we decline and go against it, which is what I'm going to continue to assume, because that's kind of been the overall view, right? That's what's been happening throughout the year. Unless that changes, right, we're just going to continue to watch for, this is a quarterly low. Okay, so the new quarter is going to start this month. So the next quarterly candle is going to be presented in about 16 days, 15 days now after today. So again, just like how we do on the monthly, weekly, and daily chart, we're going to look at the close proximity PD arrays. Okay, so we have this low here, this low. We have this wick. So the midpoint of that wick, the low here, those are important for downside objectives and potential trigger to retrace. This wick could trigger in this to want to try to dig into this order block a little bit, which it seems like it's already started doing. But yeah, so can also go from this high that took this high, buy side's been taken. We could take this low that took out this low, sell side's been taken. And you could put your fib from that low to that high I just mentioned, and now you get a premium and discount projection. Whoops, what the hell? Let me pull that up. Oh. Okay, so this is equilibrium. Okay, given the range I just outlined for you. So the rule behind equilibrium as well, just because it's relevant to what's happening right now. When we see that price is just hanging around equilibrium, it does not want to run, and it's just holding inside of a higher time frame equilibrium, that is promoting the fact that the current condition is consolidation overall from this specific time frame, which is the parent of all these other time frames below. So the bonds have been going sideways, and we could see we could see evidence as far as why that's taking place. We're just stuck at equilibrium. There's a lot of conversations going on in the geopolitical landscape, especially the U.S. economy and the conversations behind that. There's a lot of changes taking place. So as a result, there's been a lot of uncertainty. There's been a lot of chaotic adjustments that just take time to mellow out. Volatility's been amazing, obviously, but of course, it's going to test your experience. It's going to test your patience, and it's going to test whether you can control yourself or not. So the ones that are patient, the ones that understand what they're doing, are generally going to thrive a little bit better. Those that have processes, which you're getting from being on this channel and in my communities, those are the people that are going to thrive. The ones that try to go outside of that, use retail logic, they have been getting destroyed. I have a couple of students that tell me they watch others while they're live with me, just to see what the difference is in perspective. And pretty much every single live call for the last month and a half, I've been told that we would call a particular direction while retail streamers would be getting chewed out. Okay, so that tells you something. All right, so again, we're on this 3-month chart. There's going to be a new quarterly candle that forms. So again, we're going to keep this in mind for the 5-year. Again, like I mentioned, you want to keep tabs on this quarterly low here. So I'm going to mark that as quarterly low. All right, I guess I got to make a new. So pay attention to the things that I'm going to be outlining here every time I'm sitting on these higher time frames. Okay, because this is what you want to go in and do. It's a process. It's a continuous process. Those of you that are with me continuously, hopefully it's rubbed off on you as far as what concerns us. Like, what are we focused on the most? All right, because it's very repeatable and doesn't have to be rocket science. Although, just because it's the higher time frame, though, it's going to take some time to build trust. Okay, it's not like the seconds chart. It's not like the 1 minute. It's not like the 1 hour chart. It still it takes a lot more time to be able to do an analysis, take a screenshot, save that, come back on the next month, and then see how it played out. To just observe how your analysis went. Everything you do on the lower time frames is applicable to the higher time frames too. So order blocks, the model you use, if it's a YouTube model, market maker models, whatever. All that stuff and the dynamics behind reading price, the wick relationships, how to read order flow, all that stuff is the same moving to the higher time frame. It just takes more time to show the moves. Okay, so just because it moves slow doesn't mean you think you have to change everything, because it's the same. If you're looking for a run on stop, shift in market structure, fair value gap, YouTube model, you're going to look for that here as well in the higher time frame. And if you could find it occurring on the higher time frame, any model that you operate within, any concept that you use, you could be involved with something that's a whole lot more meaningful than just on the 1 minute. If you want to learn how to swing trade, if you want to learn how to do these larger time frame moves, or just simply navigate within the higher time frame but trade on the lower time frame, you want to keep this perspective in mind and keep that in mind. Okay, people overcomplicate it because it looks a little different, right? They go from one time frame to the next and it throws them off. It's unnecessary. Just remember there's a difference in patience. Different styles require different ways of operating the market. Different time frames have different ways of viewing the delivery in terms of timing. But just because it goes slow, that may not work out tomorrow, doesn't mean you just disregard it and just stay focused on the seconds chart. That's the very worst thing you could possibly do. You're going to miss the whole picture because you're so focused on that microscopic view that's in all reality working within this overall narrative from these time frames. Okay? So again, simply put, right, we're looking for premium and discount, most recent highs and lows. We're looking for close proximity PD arrays aside from just, highs and lows. And we're looking at where prices came from, where it ended up, and then we try to assume, based on what I just mentioned, the most recent near, close proximity lows, highs, and PD arrays. We take that stuff and we observe where it could potentially be headed next. And then, of course, I've mentioned this before as well. We talk about the economic calendar being pretty much a macro tool, right? Like a timing tool for higher time frame delivery. So if you're looking for a daily order block to be traded to, most of the time, it's going to require a news event to push it there. And then once it gets there, if you want to see a large move away from it, most of the time, when that news comes out, if we're in a PD array that's, worthwhile, the news that comes out later on in the week, or maybe it comes out next week, will be a result that pushes, it'll be what basically is used to push price from a level or to a level on that higher time frame. One of my students went as far as saying that he's got a rolling study as far as the role NFP and FOMC and all those other announcements, what role those play within the monthly range, right? In the weekly range, okay? In the quarterly range, right? What role do multiple NFPs through multiple months play in that larger view, okay? That's how important it is, right? That's how impactful it can be, and that's the depth you could take this analysis, and that's why you really only need one asset, but having obviously multiple to observe to justify your one asset is definitely recommended. Keep that in mind. Okay, so again, where did it come from? Where could it be headed? Near-term highs and lows based on the time frame you're looking at. Each time frame will have its own structure, so obviously we're going to carry it over. Near-term PD arrays. And then, again, like I mentioned, you can also add on the other assets later on as we dig into these other assets. But in a nutshell, if you want to keep it as simple as possible, that's what you need to be doing on these higher time frames. Okay, like we have this potential order block there. So let me change the color. Guess I'll make the quarterly orange. Make it some kind of color that doesn't confuse any of us. Okay, actually I don't need to do that. So we have this wick here and we have this wick here. Okay, So we'll measure out that wick. Break that down. So we've got the midpoint of that. You could see how impactful it is, some of these concepts. If you didn't see this wick, you'd probably think, okay, just blow out that low. There's nothing wrong with that. But again, I'm going to ask this question again. Don't you want more information that's worthy, that's worthwhile to help you be a more effective trader? Right? Like don't you want things that are, more helpful? That can get you to trusting whatever it is that you're doing? It seems like it'd be just common sense, right? So I do have a quick question, if you guys can help me out here. On the stream you guys are watching, can you tell me what the quality looks like? Because on my end, it looks clean on my streaming software. I just want to make sure with you guys that the output is looking high definition, not blurry. Because it's kind of weird what it looks like. Can you guys confirm with me? Be like, yeah, it's good, or just whatever it looks like on your end. I don't know why it looks like that. Looks good? Okay, thank you, Eddie. Is it like it's high definition? I don't know why it looks blurry on one, but not blurry on my streaming software. It's not blurry at all, huh? I appreciate you guys helping me out with this, because I can't tell. 4K? Okay, beautiful. Beautiful. Yeah, I don't know what the hell's happening. It's always something. But yeah, so, we see the price basically has hit this wick. We are, again, stuck inside of equilibrium, right? I mean, you could take this one to this high to that low. We're stuck inside equilibrium there, too. And you could see what that's doing, okay? It's just stuck. It's stuck in the mud. Obviously, if you go to the daily chart or the lower time frames, you'll be able to obviously find something to trade off of. But you have to just realize that the moves that we want, if they're 100-point moves that we're looking for, or large range trending environments, this is how you can gauge, or it's one way that you can gauge whether that's even likely to happen at all. Okay? If you can observe this type of characteristic, or at least be aware of what it looks like in terms of these characteristics on these higher time frames, it makes you justify a particular opinion. It helps you get better at conditional awareness and price navigation. So you're not in there trying to over risk or over trade or do too much in an environment that's, potentially not worthy of that type of behavior. Now, I don't promote you to be reckless in any sense. But, you're going to do what you're going to do. But if you are more of a, risk-heavy individual, you probably want to do it in the best scenarios possible. And that's in trending environments. That's when all markets are symmetrical. That's when you are clearly moving away, not just getting stuck in a particular range. And, yeah, so you want to keep that stuff in mind. And we always talk about high resistance, high probability, low resistance, low probability, so on and so forth. We talk about that navigation over and over and over. Obviously, it's conditional, right? So you have to be here in those conditions for it to make sense. It's not necessarily the easiest thing, aside from saying that symmetrical markets need to be intact. We want to see the bonds and yields moving in a particular direction that supports, like, say, what the indices are doing in a particular direction. We don't want to be trading on a Monday expecting that, or Friday, or day before or day after a holiday. We're going to talk about seasonality as well after we get through some of this. So we'll talk about the impacts that has as well, with high probability and low probability and expectations. But yeah. So yeah, quarterly low here, quarterly high, monthly high as well. Just drop down real quick. Yeah, so monthly high from April. This is a quarterly low. Okay, we don't know 100% if that's going to be the overall low because the quarter hasn't changed yet. So how can you check for the quarter to change? How can you check if a quarter has changed? Well, you could come over here. That's probably a question some of you guys have. You're going to want to go to the asset of your choice. Let's just say it is the NASDAQ. Let's just say the NASDAQ. So the gauge, in order to identify whether a quarter has changed or whether a quarter change is coming, if you, for whatever reason, want to just ignore what I told you to screenshot earlier, you look at the open interest, okay? And whatever open interest, like whatever contract month that you see here that has a higher open interest, that's generally going to be the quarter that we're inside of. And if we look at the June contract, which is the second quarter, we can go to, where is it at? Come over here. And we could see, we're going to go into the September contract, and then it ends up being the December contract over here. Okay, so this is the first quarter, right? It's the March contract, June contract, September contract, December contract. Okay. So if we're moving into a new quarter, again, you want to keep tabs on this. This is also the different letters you can have, right? Or that they have. Every year it doesn't change. It's always going to be these. And again, you gauge what contract you're in by observing this tool here. Okay, this open interest overall, contract identifier using the open interest. Okay, or the tactic to identify, right? So I hope that is easy enough. We're not going to talk about COT today, but yeah, we'll talk about seasonality and the quarterly view, and try to keep it as simple as possible. So yeah, we looked at the quarterly chart. We found the quarterly low, quarterly high. It's also a monthly high, April. That's not going to be important until something obviously changed. So if we drop down to this monthly, we can also see that we have this bullish order block here. So remember what I said about each time frame. Okay, you go from one, which we started at the quarterly perspective. We looked at where it came from, where it could potentially be headed, where it ended up. Close proximity PD arrays, both above and below. Previous highs and lows that are in close proximity. Like for example, I don't give a shit about this up here. Okay, I don't necessarily care about this over here, at least for right now. Why? Because I have to blow this out first. So why would I be worried about this right now? Or why would you be worried about this right now? You're worried it may end up going there. You can keep that in your mind. I think, if this is going to continue going lower, obviously it's going to be able to reach down there, hopefully. But there's things that we have to break through first. We're respecting the midpoint of this quarterly wick. Let me actually highlight that. Okay. So we got that quarterly wick, midpoint. It's rejected off that. And, it's still in that consolidation. Okay, and we're going into a new quarter, right? So we're going to have to get through these levels first in order to get down to here. So that's why what I'm saying is very important to identify the close proximity highs and lows from the higher time frame, and then drop down all the way to the daily, 4 hour, 1 hour. And then, of course, we have the monthly highs and lows. This is also previous week's high and low, right? So this is the low here from the week. Let me see. I'm not sure why it's not separating. Oh, there we go. So yeah, the week here, this is the previous week here. So this is the previous week's high. Okay, I don't know why I had to drop down to the 2-day to find that. Just kind of like lumps all the gray areas together on that weekly chart for some reason. Okay, we'll go previous week's high here. And we don't really have to mark this as a previous week's low. We could just keep the quarterly low observation, because it's pretty much, it's the same area. It's because it's the same area. It's not any different. It's obviously going to be just as important. Okay. So yeah, before we get too deep into that, the lower time frame, let's make sure we're finished here. So I want to ask, does the process from what we've done from that quarterly to this monthly chart, what you should be observing, what's important, because that's a critical question. What is important to me as a trader right now? And what don't I need to worry about? Because you need to learn to consolidate your thinking. And if you don't have someone telling you this stuff and you're just watching videos and there's nobody there to put you on the rails, you're going to go off the rails, okay? And try to use every single concept, every high and low, every PD array on the chart from 6 months ago, okay? And you're just going to get analysis paralysis, and you're not going to know what the hell's going on, and it's going to just be overly overwhelming, okay? So does everything in terms of what I'm identifying as important, what I'm encouraging you to see as important, what levels to identify, things to focus on, are those things clear to you guys? If you guys have been here for a while, I'm sure this is just me preaching to the choir, but just want to make sure. So just let me know in the chat. Pull up one more thing too. So yeah, just give me like a 1 in the chat, or just say, yeah, it makes sense. Because if I just fire hose things at you and there's something you're stuck on, I mean, you're wasting your time. So, okay, Freddie, perfect. All right, appreciate you, Freddie. So yeah, one other thing I want to pull up too, just for completeness sake. I'm not sure if all of you guys are in my free Discord, or those in my private community get this like pushed onto them aggressively. But let me let's go to June. Okay, so this here, oh, for sure, Freddie. Yeah, I remember. I remember you're pretty new. So yeah, this here, let me actually change that. So this here is very important. It's a little template I give out. Because again, I'm here to help you gain clarity. Those in my private community, I mean, they have a resource that I wish I had. The videos are great. ICT's lessons are amazing. But, we're in 2025 and we like things, a little bit more clearly explained and 1, 2, 3, 4, 5 step equations. A lot of us don't want to go searching, although some of us had to, like me. I had to go dig in and figure it out. But this is like a template that, throughout my experience, through the last almost 6 years now, I've accumulated different levels that were important to me and things that I wanted to use as building blocks to my narratives, my targets, and simply answering the question, what is important to me right now? Okay, like I just kind of discussed with you guys. This list here is something that helps you achieve that and answer that question, right? So if you just look at this on top of the way that we do analysis every week, I mean, it's served to you on a silver platter as far as what you need to do in terms of observations, higher time frame wise, because again, that's where you want to begin with narrative. So this kind of just gives you important levels to pay attention to. So, so you're not flip-flopping across all the different highs and lows and just getting lost in price delivery. Okay. So take a screenshot of this, or if you're in my free community, my Discord, I also share this from time to time. It's just a template, the roles each of these highs and lows play within the daily range. Obviously, it's a little more advanced. And, a lot of students, will need that eventually. But, a lot of students that come across me on YouTube, they vary in skill set. So I got to start, crossing one bridge before I push you guys through another, because you'll just fall off the bridge. And I'm not trying to have that happen. Okay, so screenshot this for either future reference, Freddie, especially you because you're new, and then use this as kind of like a template when you're on each time frame, right? I even have it separated. Higher time frame references, these are the higher time frame references. You can add the quarterly high and low, or the quarterly perspective as well if you wanted to. Of course, it's something that takes a while to print, but you also want to add for the higher time frame references is higher time frame PD arrays. All right, it's kind of like a given, which is why I don't have it here. But higher time frame PD arrays are also obviously higher time frame reference, right? It's in the name. And then lower time frame references for more real-time price navigation is going to be some of these levels I have mentioned in here. So these are some stuff you want to pay attention to. And of course, each of these elements has a role inside the daily range. Okay, so that's where we can take this to a deeper level, more in depth. But just from a face value, from a standpoint of having a template that can help you navigate liquidity and what's important, what's not important, this is a pretty helpful tool. 20, 40, 60-day look back has to do with the IPTA data ranges. Again, more advanced topic. So if it doesn't make sense to you right now, don't stress out. Just try to pay attention to things like previous day's highs and lows, any of the highs and lows I have mentioned here, AM session highs and lows, the first presented fair value gap. Right, that's been like something that's talked about recently for everybody. Right, he introduced it to everybody, including charter students, for the first time. And try to observe all these different levels and see how they behave in the daily range. And if you're not familiar with the daily range, or the weekly range, or the monthly range, you want to make sure you are spending a ton of time in that, because it has to do with power of 3. And if you're not observing power 3, if you think that you could just skip power 3 because for whatever reason you don't want to study it, that is the foundation of ICT's trading. That's the foundation for price navigation as an ICT trader in general. So it's that important. Anyone that I have told to go study that, whether they're a swing trader, day trader, scalper, whatever, everyone that I've told to go study that, and everyone that I've basically made them take this serious in terms of that concept, power 3, it has changed everything. It started to push them in the right direction. And then, of course, all the processes we show here continuously added on to their own studies and ICT concepts, and like I said, power 3, everything just starts to fall in line over time. Okay, because you're borrowing my experience here, and you go observe these different things that I mentioned. Again, it keeps you on the rails. Okay, so again, every time frame you look at, you want to make sure you're identifying the most recent highs and lows, given the time frame. And then as you drop down, you do the same thing, right? Like we did here, quarterly low, which is also a weekly low. We observe the quarterly PD arrays that are in close proximity, like close to us, that are important right now or in the future, near future. Then we drop down to the monthly, right? We see a monthly high here, monthly low, same low as the quarterly. Go to the weekly. We see that the weekly lows here, we have another weekly high here. Now we're looking at close proximity PD arrays. So the close proximity PD array here, let me pull just that up. The close proximity PD array, or PD arrays, that we want to observe here, right? If we move, let's move up one more time. 2 month. So there's a 2 month bearish order block here. There's this wick in here too. So notice how the wick here is also the quarter of the quarterly wick. Okay, so that's going to be significant in terms of dynamic levels. So we have, let's go to the weekly. We've got this volume imbalance in here. Let me highlight that real quick. Okay, so we've got that weekly volume imbalance. So we're going to want to see what the behavior is here off of this weekly volume imbalance. That could be a significant level of rejection. If this structure is obviously going to continue, that is going to be something I'm going to observe. We have this bearish order block. Okay, so this is a 2-week bearish order block. We could just say it's a weekly order block. Okay. Find it. So it's a weekly order block. Okay, so we're inside of a weekly bearish order block after we took sell side, after we hit the quarterly wick. Now that's bounced price higher. Notice the wick here, price traded into it, failed to get down below the midpoint, so it continued the retracement. Again, we are inside of a level where price should be able to hold. So now we want to talk about invalidation. Okay, so we're in a downtrend. Overall, though, we're in a consolidation, as you could see. So if we're going to trust that this is going to continue to go lower, okay, let me turn. If we're going to trust that this is going to continue to go lower, we're going to use this time frame here for validation of our narrative. Okay, so how do we do that? Well, you look at 3 PD arrays above price. Okay, we have this weekly bearish order block. We have this volume imbalance. We have another volume imbalance. Right, if price gets up there, I'm going to be suspicious. And then if we take out this high here, my whole narrative has changed. Keeping in mind that we're still inside of a range, right? It's still consolidating. So it may just bounce back and forth in here. But if we keep this failure swing down here, I believe there was an SMT that I just talked about. Yeah, there's SMT at the lows. Okay, so I'm not going to trust this SMT, obviously, just because it's there. Okay, we're going to look at this. If I could find the damn SMT thing. There it is. Okay, so we're going to use this SMT and these 3 PD arrays to try to gauge whether price is going to continue to go lower, attack this low, before it does that, attack this low. Or if it rampages higher here, right? If it takes this high out, that's multiple PD arrays getting violated that I would not want to see get violated. Okay? And if it does this, my attention quickly goes up to the highs up here. Now, this may be a time when, you know, say this was the indices and you were looking to short. And what if it does something like that and goes against it, you know, and pushes all the way up there? It may be a time where you end up taking a loss. You know, oh no, right? It's going to happen. That loss, if it was to be taken or encountered, you look at it as you paid for information to get the right information. Okay? And price, if it got up into this level and took out this high, you would now have a very justified reason to now switch from bearish or bearish interest to then looking for buy side. Okay? That has not started yet. We have given this retracement. There is SMT here, so we start to consider the possibility of price wanting to pull back and maybe attack some of these levels first. We got the weekly bearish order block here. Okay, if we can measure out that weekly bearish order block, okay, measure that out. Okay, and now we have a midpoint of that weekly bearish order block. So it's going to have to stay within this specific area, preferably just, you know, stay, or preferably not even get back to this midpoint. Okay, we prefer it to stay within this and decline and, you know, maybe violate the low here and then, you know, look to continue to race lower. We have a volume imbalance here too, so maybe it reaches down to there. We'll see. But, you know, the overall process that we're observing here, let me go back up into here real quick. Just remove that. Yeah, so given the things that I've just mentioned, right? I mean, these are the things that you want to pay attention to, from the areas of importance I mentioned, now to invalidation, to different observations like, is there SMT? And can that SMT be trusted, right? If it hasn't displaced and shifted market structure from the SMT, a lot of times you're going to have to wait for more confirmation. At least I am going to have to wait. Okay, I'm not just going to push it because I have the 3 PD array invalidation principles. And that has worked flawlessly for the last 2.5 years. I mean, it has been spectacular. Okay, when it comes to higher time frame validation of a particular level or invalidation. Okay, it is spectacular. It really is. ICT himself has mentioned it. He mentioned it like twice. Many people missed it, but you know, that's kind of how the cookie crumbles. You know, that's why you got to watch as much as you can and get around people that can help accelerate your learning, or at least be there to support you and tell you what's right, what's wrong, what's normal, what's not. And then like we're doing today, what to focus on versus other things, you know, so you're not wasting your time worried about crap that is maybe further down the line for you to worry about rather than right now. Okay. So yeah, given the overall process, like everything that we talked about, and now me incorporating the validation, invalidation for where price is currently at right now, does this stuff make sense? From what levels are important, how to gauge the condition, right? The importance of equilibrium, on the higher time frame, different levels that are important, what to expect, what will lead to what, right? Is this going to continue? What will happen if it, or what will have to happen in order to invalidate that? Does all those different elements make sense to you guys right now? Just let me know in the chat. It does. Okay, beautiful. Yeah, Fritz. Welcome, brother. And Freddie, okay. Freddie, for you to be new, if you're new, like less than a year experience, and what I've just mentioned makes sense, that is pretty phenomenal. You're going to progress fairly quickly if that's the case. Okay, so, all right, I'm glad that makes sense. So that is going to be my opinion. I'm going to anticipate this potentially, maybe it does want to dig a little deeper. Because again, we start the week thinking about power 3. Power 3 is accumulation, manipulation, distribution. So the start of the day, or start of the week, is going to be accumulating and manipulating. The start of the month, from a monthly perspective, it's going to accumulate and manipulate, most likely for the first week, sometimes into the second week. And then, expansion comes generally in the middle of the month for the weekly or for the monthly candle, and then it caps the monthly range towards the end of the week, end of the month. Okay, so that's why last week we saw a retracement. Because why? Because the monthly range has delivered already, and it hit a higher time frame weekly bearish fair value gap on the indices. Okay, if we go to the weekly chart, right? Price had a expansion, hit a weekly fair value gap. I mean, all throughout here, we kind of worked that fair value gap. But the monthly candle has already printed from way back here. Okay? Notice how it opened up here, declined first, then rallied. And then once it hit this opposing PD array, right, the two middle weeks, obviously one was more aggressive than the other, but price ended up running one more time and then capped the monthly range. So this is what the monthly candle looks like. Okay, if we go like this. Okay, it's got this. Right? That's what the monthly candle looks like. And we don't even got to go to the monthly chart to see that, because why? We understand power 3. Okay? So, I can't overstate how important power 3 is. People think, oh, it's just basic, there's other more advanced stuff. You don't have to know all the advanced things to be good at trading. You have to be a master of the basics. You have to have an answer / a process for all 10 categories that I have outlined very simply in the free Discord and all throughout my private community. It's laid out fairly simply. But mastery and wisdom and experience is what leads to simplicity. At first, we're always overcomplicating everything. Think about it. Whenever you did anything that was kind of complicated, when you first started, everything was just so complicated, and you just wanted to make it, you wanted to get to the advanced level quick. You wanted to do this or do that quickly. And it becomes more complex when you do it that way. But then over time, it gets easier. It becomes second nature. Like you're just able to do it, like riding a bike. It's only hard at the beginning. But once you understand the dynamics, you're able to make it more simple, and it becomes, like anything else. But simplicity comes with mastery. Simplicity comes with experience and just understanding what it is that you're doing and mastering the basics. Okay? Advanced topics are not what will make you successful. They'll make you more dynamic, 100%. But the basics get you there first. The basics, the foundations, power threes, the navigation of liquidity, which we talked about a little bit today, and I talk about it all the time. Risk management, all these different things that people overlook in the pursuit of trying to get the best model. Okay, there's no best model, but the pursuit of that, with that perspective, really slows people down, and then it becomes over complex. And they don't know how to simplify. But that's what I try to do. I try to make it simplistic and tell you what to focus on. And again, the depths in which we could take each concept, even Power 3, is vast. It's massive. You're not going to learn it in a week, in a day, in a year. All the different complexities of every different topic, even just all the topics that I talk about. It's taken me years to get to where I'm at. Some are going to progress faster, especially being able to have someone there that helps guide you through the weeds. But, expect that it's still going to take a little bit of time. Okay? But yeah, so this was the previous weekly candle. And again, as you could see, the middle two candles had the most velocity. The starting candle had less. The ending candle, it was pretty decent, right? Because it blew out the high and whatever. But the two inside candles, the middle candles, the middle of the month, that's generally where they're going to nest the expansion phases within a monthly range. It's similar to how Tuesday and Wednesday, going into Thursday, are generally when the weekly candle prints the most expansive ranges. And why? Because Power 3. Right, same with the daily, right? London going into New York is generally going to give you a pretty fast-paced move, right? Asia and the PM session or London's close, those are generally going to be when the range gets capped. Okay, Asia's slow, starts the accumulation, manipulation, and expansion will come from London and New York, and then again it caps the weekly range, or it caps the daily range going into the London close or PM session if you're trading the indices. So that Power 3 dynamic, I just outlined each perspective. From monthly, it's there. Weekly, it's there. Daily, it's there. Okay? So again, it's so important. And you can visually see how this understanding of Power 3 and the basics can help you navigate what you're looking at a little bit better. It makes sense of the chaos at times. Okay? See, I hope that kicks some light bulbs on in terms of the Power 3 perspective. Just keeping it basic, keeping it simple. Okay? Some stuff's going to take you a little longer, but enjoy it. Because when you look back, you're going to be thankful, obviously, that you arrive, but the excitement is going to come from the journey and the things you have to grow into and overcome. You may not think about it right now in that way because it's painful in trading at times, but you'll look back and appreciate the things you've been through because it's going to create you into a savage. Okay, and every trader that's worth listening to in every community, doesn't matter who they trade with or what concept they use, they have all had to go through it. And you're not going to be the exception. I wasn't. ICT wasn't. So don't expect that you will be. Maybe you'll be the one that learns faster, but you're still going to be faced with some stuff. It's unavoidable. And you have to go through that stuff in order to desensitize, whatever ups and downs you face. It's required for you to desensitize yourself. And, just like how going into the military, you got to get through boot camp. You have to go through this intense training, to go into war, which unless there's an actual war breaking out, which there is obviously recently, but unless there's a war breaking out, all your training was basically done. The intense training was basically done for you to sit and wait. I have military friends, family, and they tell me that that's kind of how the vibe was. Unless there's a war, unless there's activity taking place, most of the time it's very boring. But all that hard work was to prepare you for the moments that you're going to need it. Okay? So, yeah. So if you haven't dug into Power 3 intensely, I recommend you do so. I do have a series on my YouTube channel that talks about Power 3 specifically. I have one for market maker models, so definitely go and enjoy some of that content as well. But yeah, so this, so again, I hope this asset makes sense as far as what I'm looking for. And then we'll take this. Again, this is my invalidation for sells in this asset. If we start pushing up through here, again, it's kind of suspect. Maybe it'll pull up into there and then decline. But if it was to retrace into here and hang around in here too long, I would be very suspicious, and obviously it would just be in a range-bound environment. So when the interest rate markets are in a range-bound environment, you also want to expect that may influence some of the precision elements in the other assets like DXY, the indices and foreign currencies. Because if these are in consolidation, sometimes it will have an impact and make those other assets get in consolidation, or continue to crack the correlation of those assets. Because, when this happens, something on the back end in the economy and political environment is taking place. So moves are being made. And if there's too much uncertainty, if they don't know what's happening, a lot of times, decisions will take a while to be made. Okay, so yeah, keep that in mind in terms of conditional awareness, situational awareness. So this is, it's kind of leaning towards that, especially because the other ones are definitely consolidated. Okay, so you add that on top of the fact that seasonally, we're going into a month that is generally, or like a string of months being, July going into August, June, July going into August. Generally, they are a little harder, a little less precise. And so again, drop your risk, keep it cut at least, 0.75% or, half of what your normal percentage is. Because especially if you have less than 1 year experience, even if you're in a demo, because you are in an environment that may be a little more difficult. You add that onto the fact that this is the start of the month. We're going into a new quarter. There's lots of different landmines sitting in front of you that can, be less forgiving. So that's just the environment. That's not something for you to be scared of. That's something that's something for you to take as wisdom from someone that has more experience. That's a lesson that's only learned through experience. And this is the benefit, like this type of perspective and piece of information is the benefit of being around people that understand, that have been here for a while longer, that prove that they know what's happening, which we do on a weekly, daily, monthly, and at this point, yearly basis. Okay, aside from what ICT teaches, obviously, because it's the source and where I got my wisdom from. That's where you guys are also going to get a lot of yours too. Okay, so I'm going to pull up the seasonality chart so I can give y'all a quick little view real quick. Let me go to... Okay, so this is the June seasonality for the S&P. You see how all three lines, I mean, they're kind of showing like they want to push lower in a retracement. There's somewhat of a high, but it's not significant. There wasn't really much that takes place off of it from the data. We do see that there's this low here. Okay, so this low that's formed, I'm assuming in June. This low that forms ends up sending all three of the averages from 5-year, 15-year, 30-year higher. All right, so this is data from years and years and years ago. So I mentioned this before, but the way you use this is you identify lows that lead to large runs, highs that lead to large runs, where all three lines are in agreement. Why is that important? Well, that's important because that's showing you a signature of a strong seasonal influence. It's the same if we see all three averages going sideways, because that will present you with a time where price is likely to not do much. Okay? So you can see that a very similar thing takes place again here in September. September's over here. Then October, November, blah, blah, blah. Right? So June, July, going into August, sometimes seasonally gives a problem. You could take this information and go study it on your own and see that this is a fact. It's super accurate, this seasonal influence. It's very interesting. You know, it's just another one of those things that you learn over experience. This takes time for you to see this year to year, month to month. So I'm sharing insights with you that I have accumulated from years, which, again, I got certain perspectives also from ICT himself in terms of the importance of this and what I just mentioned, the study. You take this analysis and you go study it in the row chart from the last 10 years, and you get some valuable information, forecasting, projection information, year to year, month to month, and it builds your expectation for what could potentially take place when you're looking at current price delivery and the current narrative and condition. It's just another one of those pieces of information that most people don't use, and something that most people will never use, and most of the time missing this information puts them in the back, and it puts them back. They'll have an opinion, and maybe it'll go, like, price will go against them, but then we'll have a different opinion and it'll follow what we're talking about. And even if it goes against us, having this type of information, it allows us to keep on the rails and trust something even if it goes against us a little bit, not only because of this, but also because of the way that we observe and put value in the higher time frame. Okay, so again, this is a higher time frame perspective. It's not something that you need to worry too much about in the lower time frames. But again, if we're building a narrative, every Sunday we build a narrative. And for the last, I think the whole year so far, every Sunday analysis has come to fruition in some form or fashion. And I'm not just saying that. You guys have been here for a while, some of you, and you have seen that. Okay? I mean, it's very convincing. And there's no way to fake this because it's recorded, it's time stamped, and we're here also engaging every single day or every day that's worthwhile. Once on YouTube and 5 days a week in my private community. So yeah, it's incredible. Okay, so this is one of the secret weapons you'll learn to use. So we had the S&P there. If we look at June here, we see that the NASDAQ has a very similar view. It is a little bit more, a little more exciting, I guess. But the overall average is very much the same. They follow each other. So if we're going to see consolidation, we're going to see consolidation. Okay. Let's look at the DXY now. So we looked at the other assets. We can now see that the DXY has a pretty heavy bearish overall view, but if we move a little closer into here, it does seem like it has a very similar sideways interest. It's very sporadic. It's not really too, exciting in terms of the seasonality. So again, all you're looking for on this, using this tool, because it's the monthly analysis we're doing here, we have to incorporate seasonality. Some things will not be involved every day, which I don't talk about seasonality every day. I don't talk about COT every day. So, we got to incorporate this and always be reminded. Okay, so you look for areas in price where there's lows or highs that form, that lead to large runs, that all three lines agree with. And you also want to look for times where it goes sideways. All right, in this case, September going into October, shitty. Right, going into June, July, August, it's the summer months. Generally, there's sometimes issues. And we could see that the seasonality chart looks a bit chaotic. It looks like it favors more downside, though, overall for the DXY. Right, 1, 2, 3 lines still aiming lower. So we'll see if that has an impact. We've already been bearish in the DXY. So we'll see if that's going to continue. Okay. And seasonality kind of appreciates that. We see, again, the NASDAQ going sideways. And then we also see the S&P going sideways as well. So we keep this in mind. Okay, so I hope that explanation of seasonality and how to use it makes sense. It's very useful going into the month. You just put it in your notes, like what you observed and what you think could be the expectation for the week, for the month. I mean, even the week, right? To start the month. You want to definitely break your months down into different sections, like 1 week, 2 week, 3 week, last week, or you could do start of month, first week. Expansion portion is in the middle two, so the second and third week. And then the last week can be looked at as a possible cap of the weekly range, especially if we've been expanding, which again is what we saw in the the NASDAQ recently, which we'll discuss in a minute. So again, I hope this has made sense. I hope this asset makes sense. So again, you would just come to this. I'm not going to mark this one off. It's kind of self-explanatory. You just do the process that I explained early on, right? You observe the high and low of the current candle on this higher time frame. We can move up to the quarterly just to get a view real quick. It's the same vibe, right? It's still going sideways. We do have the quarterly high here. We have a quarterly low here. We have previous quarter that was violated. We have this current or soon to be previous quarter low, quarter high. So if any of this stuff, if the highs are going to be taken, if these lows are going to be taken, this range within this quarter, from the quarter that's about to pass, the high and low there are the extremes you got to pay attention to. Because why? That's the most near-term liquidity. Okay, and then again, as you drop down, you start painting a picture inside of that range. So you're not worried about what's over here. You're not worried about these highs up here. You're not worried about any of this stuff up here or down here. You're only worried about what's inside this and the liquidity that is going to be present if we break out of that scenario. Notice how from this high to that low, we're at equilibrium. No matter how you slice it, you'll be at equilibrium, right? Take this low to this high, equilibrium. So it doesn't matter. It's super sideways. So again, we're just hanging around equilibrium. What has that resulted in? Consolidation. Okay, so the yields are a bit consolidated. And again, the only high that you need to be concerned with for this asset, similar to how we're talking about the other the bonds, it's going to be the quarterly high here, which is also a monthly high. And then you also want to pay attention to the monthly/quarterly low as well. And then, of course, if it breaks that and starts looking like it wants to get up to more extremes, then you start implementing the other things. You can keep tabs on it like I'm doing here. But, yeah, this is all you'd have to concern yourself with from this type of perspective, this type of analysis. You're not worried about this order block over here or this fair value gap over here. Who gives a shit? You're worried about this, okay? Yeah, this monthly high, I'll keep that one there too. Then, yeah, I feel like I'm getting sick. Ugh, man. So yeah, this is we have this order block here too, so that may be something worthwhile if we do end up staying above it. If we get outside of this candle here, say it closes up above this order block with an order block inside of the order block, this, if we get above it, becomes a propulsion block. and this may send price pretty aggressively to the buy side. Otherwise, it's going to fail. Okay, we got a wick in here, so watch the wick. We want to see the behavior of that. But that propulsion block idea, you don't have to don't put too much stock into that. It's not there yet. We have to get up above, then trade back into it for me to even care. But that is something to identify and think about because I see it there. This would not be classified as one because it's just an order block delivering down into this order block. This is inside this order block's range. So that's what would classify this as a propulsion block. Okay, that's the difference, right? Normal, propulsion block. Okay. But yeah, so that is all we would be looking for in terms of liquidity, like what's important. Drop down to the monthly. You can see that these are each monthly candles. So this is a monthly high here. Okay, and this is a previous month's low, but there's also this month's low. So we're now zooming into price. We're cornering it in, okay, in terms of what's important. All right, so let me make this bigger. So we went from the quarterly, made some views, okay, identified the overall delivery, what it looks like. Now we drop down to the monthly. Now we got more liquidity that's more close to price action, given the fact that we're day traders, okay? So because we have that, now we got to look for PD arrays that are significant here. So we have this inversion down here. Okay, if we drag that over, it's a possible inversion for value gap. So we're going to keep that in mind. Got this fair value gap in here. Okay, so these are levels that we keep in mind. Okay, so these are the close proximity PD arrays, close proximity highs and lows. And yeah, if we look around, I mean, you could make the argument that some of these levels are possibly going to be significant, but we already have this one, so I'll just keep it clean and just use that one. We go to the weekly now, and now we could get even closer. Okay, so now we have this weekly low here. So this is the previous week's low. All right. And the previous week's high. So now look how close we got and how narrowed our focus has become in terms of what liquidity is going to be important. Just simply by going from one time frame to these, or the higher time frame quarterly, down to the weekly time frame, right? And the close proximity PD arrays keep our focus on what's truly important. Okay, so let's go to previous week's high, previous week's low. Okay, so we got this fair value gap from the monthly. Actually put it on the right color. There it is. So yeah, I hope this process has been fairly simple. Because again, this is repeatable. I'm spending very special quality time with the process overall. And just like what I'm looking at and making it very, very, very obvious. To the point that it's like going to be impossible for you to do it incorrectly. Okay. And if something doesn't make sense, just let me know. But yeah, so when the new week starts, we now have a bunch of different liquidity pools that may become significant. We also have volume imbalance in here. We have fair value gap in here. Another one right here on the monthly. So we'll just keep the monthly there. And if it's going to go higher and look to want to reach into these levels, right? If we go to the 2-week chart, we could see this order block here. So that's a close proximity PD array. There's a volume imbalance in here. That's close proximity. So we'll have to just see how that behaves. And if it continues to support that, great. It'll continue to go higher. and it'll probably sweep out this previous week's low for liquidity, run a little deeper into this bullish order block on that 2-week chart, then displace. Once it gets above that, it will have to get above the monthly fair value gap, this monthly order block, and then we can we could frame out a setup using power 3 to get us up into the highs up here, and then maybe eventually get excited enough to take out the buy side up there. But we just narrowed price down. The only way that I'd look to short, the only way that my opinion would change from buys to sells is if we break this low. Why? Because that's 3 PD arrays getting violated, shifting market structure the other way. Because think about it. If it comes down into this level, are we really worried about it getting back up into here? No, it's more of a concern right here, because look at the levels that can be used to support it going higher. It's been going higher. There's relative equal highs up here. And, you know, it would need to do a whole lot more to get down than it would to have to go up, or to go up in general, okay? And we narrowed things down from the quarterly down to the weekly. You can even go further and go to the daily chart. And now we can get even closer. And now we have things that are really relevant, or more detailed, really detailed, such as new week opening gaps. Now you could see each gray area shows you a new week opening gap. Okay, so you could then try to see. Notice how a lot of new week opening gaps are layered on top of one another. When it's doing that, and it's not just displacing and continuing and creating new ones that don't get retraded into, we're in a consolidation. Okay, that is a way to gauge consolidation as well. Not only equilibrium on the higher time frame, but you can also gauge it through overlapping weekly candles, right? If you go to the weekly, I think you could see it right now. Things like this, right? This is more obvious. On the NASDAQ, you can see that that's the phenomenon taking place. It's overlapping. So again, that is telling us we're in consolidation. Because if you're trying to get down and dirty and gauge, like, what condition are we in, that's a pretty simplistic way to do so. And yeah, so then, you know, you can know to lower your risk or keep it just normal, managed properly. Okay, so yeah. So I hope that makes sense. And, you know, I'll let you guys go in there and do a little bit more deep identifying if you do want to go in and do some more stuff on this asset. I think this personally is enough. I don't trade this asset, so I just need to gauge what the direction could be. And I feel that we've done a pretty good job narrowing it down. And again, if it just starts violating and just starts displacing lower, again, we have the order block here on the 2-week. We have a volume imbalance. We have a monthly fair value gap. So I would really like to see us attempt to, you know, not trade too deeply into here again. Maybe punch out this low, but only use a wick. Stay within the midpoint of this 2-week order block, and I would want to see it displace away from that. Again, it is the start of the month, so expect that if we're trying to see it go higher, it's going to want to go lower a bit first. In the first week of any month should always be looked at as manipulation and consolidation within the monthly Power 3 delivery. Same with the week. Right at the start of the week, Monday should be accumulation manipulation. Tuesday, Wednesday should be expected to jump in the direction of the higher time frame. And then, of course, Thursday, Friday, if we hit a PD array opposed to that higher time frame narrative, it should be a rejection. Tuesday, Wednesday, expansion, so on and so forth. Okay, it's the same thing over and over and over. So you want to burn this in your head. Everything we've talked about today, you want to try to burn this stuff into your brain, because you're going to use it forever. You know, and if you don't learn it today, if you don't accept it today, you're going to be forced to eventually. So you might as well do it today, right? So yeah, that's enough of that asset. So again, we want to see if this can continue going. We want to see if the yields or the bonds can continue going lower, possibly, unless of course it violates up there. Opposed to that, you know, we'd like to see this decline a little bit, then go higher. I will say one last thing about these interest rates is if the yields drop and the bonds choose to rally, that is supportive of bullish indices, bearish DXY, which is what is currently taking place overall in general anyway. So if it does that, it's probably going to be a much cleaner environment. It's been okay for the indices. It has been going higher. We've been able to call it, but yeah, we'll see. We'll see if it wants to start supporting us going higher. I do hope that happens, because then that'll start to show us evidence that we're getting into a better environment. I'm not so sure, given the summer months and how the seasonality is, I'm not so sure what the odds are of that kicking back in line. But we'll see. It's a very unique time we're trading within. So yeah, hopefully that does take place, because it'll be a lot of clean salad days, like ICT calls it, clean days, very easy trading days. But yeah, and so we'll be able to be even more dynamic than we already are. But doesn't have to change. It could continue doing what it's doing. Still gonna beat the shit out the market anyway. But anyways, I hope this stuff makes sense. So we'll move on to the currencies now. So we have this low, higher high. Okay, so this has actually created a bullish breaker on this higher time frame. Okay, we also have, if I'm not mistaken, this large wick. So if price continues to stay above that, I would enjoy seeing price not even try to get below the middle portion of this. So the 20, I don't know. Yeah, I guess we could use this. Okay, so if we look at this monthly chart, this is a monthly bullish breaker. So I'm not going to change my opinion on this until it is really, really expanded against this and drops lower. Maybe breaking through this breaker would start to have my mind looking towards this. Okay, this monthly fair value gap obviously has been pretty impactful. If it could stay above that, if it could stay above this breaker, that'd be pretty amazing, because this high to that low, if the breaker supported, should be able to act as a balanced price range. So we shouldn't even attempt to try to dig too deep into there. So that's going to be my expectation, unless something changes, obviously. We have taken buy side. It is in a mode of potential retracement, but it's just been a beautiful market maker buy model we called well ahead of time. Go back to December, go back to February, January, go back to March or April. We've been calling this exact thing since way back, so yeah. So again, go look for yourself and see how we were able to navigate, because it's been pretty fascinating. So yeah, we're just going to keep this same idea, right? We have this wick here, this overlapping of the wick and the candle here. Hopefully you could stay above that. Monthly fair value gap inversion here. Hopefully you could stay above that, continue. We do have this monthly high here. So again, I would much rather prefer to see price stay above this zone up in here, or area in price. We don't use zones. We use specific price levels, but also in this case, we're going to use a zone. Okay, so if we could stay above this upper portion of the breaker, given the fact that breakers are generally balanced price ranges, if they're valid, of course, if it can stay above that, then we'll have a pretty nice ability to trust price continuing to go higher. Again, there is an SMT at the highs here. We have hit a quarterly fair value gap. You could see the significance of the quarterly perspective. Okay, I mean, it just beautifully hit that. Same with this too. I mean, it's important, right? These larger time frames are important. Helps you justify even further. We can see this wick here too overlapping. We could just see the way we do analysis, everything just piles on top of one another. We got this weekly fair value gap here too. So multiple levels down here need to hold in order for price to continue. These levels would have to be violated to the downside if it is to trigger in some type of deeper run to the sell side. I'm not gonna put too much emphasis on that unless this breaks down below this low, because in that case, we would then break through a weekly bullish fair value gap, a swing low, and then most likely it would be violating or try to violate this weekly wick midpoint in here, plus a quarterly fair value gap. So it would be a pretty strong reaction after taking stops up here that may turn to a shift in market structure after a buy side raid, which will, then maybe send price down below to these lows or this order block, or even maybe this fair value gap if everything was to turn around and make a change like that. Okay, but unless that takes place, I'm going to continue to trust buys. There's no reason to change anything unless something's changed. Okay, so nothing currently has changed to convince us that buy side's going to turn off. It's continuing, so we're going to continue to push price higher and keep justifying that delivery. Okay, so that is some of the levels I'm looking for on this time frame. Let me actually put my other headphone in. Dying, headphone died. Can you guys still hear me? Just want to make sure. The Lonely Warrior. Can you hear me, brother? Just let me know in the chat if you could hear me. Stupid headphone died. Yes. All right. Beautiful. Perfect, Freddie. So yeah, everything that I just talked about for the currencies, does that make sense to you, brother? I want you to try your best to try to outline it, pretty much what I'm doing here. So then you can have it or screenshot what I have here and then come back at the end of the week or throughout the middle of the week, and then let's see what the comparison is. I'm pretty confident that this is probably going to hold. If we are going to try to retrace and dig a little bit deeper because it's the start of the month, maybe that gives it the okay to want to run these lows out. But again, as long as we stay above the wick midpoint here, we should be fine. And the same with this as well, right? We prefer it not to try to attack that if it's going to be super bullish. This weekly fair value gap here and these different levels should be able to hold price and just continue to march us higher, just given the overall sentiment. I usually rewatch the videos too. Oh, perfect. See, that's what's going to separate you, bro. That is what's going to separate you. I'm telling you, man. Some people want things too quickly. If I come out here and give incomplete information, the skill set is not going to be fully built. And then they're just going to build this dependency on, what's Christian going to tell me to do today? What is he doing tomorrow? And then if I can't get on for whatever reason, or if God forbid something was to happen to me, they wasted their whole entire time because their goals and expectation and mindset is just completely off. So you accepting, rewatching videos, and just showing up consistently is going to put a real change in the progress you make. And, you're going to get a lot of insights based on experience that you wouldn't learn unless it was years down the line. And sometimes, maybe you wouldn't even have thought of certain things that we talk about in terms of, experience-based information. Like seasonality, right? Most people don't use seasonality. Most people don't talk about it because they think it's boring, or the viewer will think it's boring. If the viewer thinks it's boring, they shouldn't watch any of my videos, okay? They don't want to listen to these critical things that get me to where I'm at currently and where I'm headed even further into the future, and where my students are headed, and where some of my students have already, arrived at, because it's all the different intricacies, the boring things, the stuff that, requires work that's going to get you to where you're trying to go. And the work obviously is the study, the asking questions, the constantly trying to get problems solved that you're having, reflecting and all that stuff, journaling at least for, a couple years. I still journal, but I mean, it's not as in depth as I used to do it because I already know my process. I know what I'm looking for. I just, journal my entries. I journal what I was thinking. I journal the targets I anticipated, whether they were hit or not, how I felt about it, what was happening in the different markets, how I was feeling based on those other markets delivering. If something fails or not, I try to describe why it failed. But other than that, it's pretty much just, it's pretty much all I add. I used to add everything, like what's like the process and a bunch of things that are irrelevant. The only way that I figured out what was irrelevant and what was causing me to have analysis paralysis was through reflection and journaling. And then, of course, experience, figuring out what works, what doesn't work. But then being able to look back and see where I came from, it's astonishing. It really is. And it's the same experience for everybody that does choose to, journal pretty intensely early on. And then, because it marks a time, it marks a place in time when it comes to your journey. And this is a fascinating, amazing journey for us to all go on because there's growth, there's unbelievable expectations and lessons in reality that we have to face and admit to. And then there's accomplishments that you want to always have close to your vest, so then if something bad happens, right, or if you take a loss or whatever, which should never be looked at as bad, it should just be looked at as a learning experience. But if that stuff does take place and maybe you hit a losing streak, your accomplishments, you want to document them and celebrate the crap out of them. Don't be delusional. Think, oh, I'm the best now because I won 2 trades or passed a funded account. But you want to be able to have those accomplishments, congratulate yourself, positive reinforcement, and then be able to look back on those times when more difficult streaks end up taking place in your trading. You want to be able to be your own best coach. You want to be able to be there when nobody else is for yourself, because we can't really talk to anyone about this. They don't get it. They'll just tell you to quit. Oh, you're upset about it? Well, stop doing it. Easy solution, right? But people don't understand. So again, there's many benefits to journaling your trades. I have a video about that too if you want to check that out since you're kind of new. Just go type in WMG Trading Effective Journaling and it should pop up. But yeah, it's a great thing that you rewatch videos. Don't only rewatch videos that I do, rewatch ICT videos too. Rewatch Power 3 videos. Watch so much Power 3 stuff that ICT teaches and the series that I have done. Watch it so much that you can say whatever we're going to say. Because I'm telling you right now, it is the number 1 foundation, maybe number 2 aside from risk management, that's going to really solidify everything. And then if you want to take it a step further, you can learn market maker models and then merge those with Power 3 as well later on, which I have a video of market maker models in my my video archive here on YouTube. Freddie, are you in my free Discord by chance? Or do you follow me on Instagram? Wherever you follow me on, if you could send me like examples of how you journal and what you're journaling, just so I could see the structure in terms of how you're journaling, so maybe I can give you some advice on how to make it as effective as possible. If you like the way you journal, obviously don't let me tell you any different, but if that's something you maybe want me to see, I'm more than happy to look at it. So yeah, that's definitely open for you, brother. So yeah, I hope that the currencies make sense. That being said, let's move on. I'm not trying to hold you too long. Yeah, so let's quickly kind of go through this. Basically take all the things that I've just talked about in terms of what's important, what to identify, what we looked at on the other assets, apply it to this chart, right? So let's go to the quarterly because it's a new quarter that's coming. Quarterly low down here, so let's mark that. quarterly high. Okay, so we have that first layer. Now we have this quarterly bearish order block. I outlined this. I also outlined a monthly bearish breaker a while ago. If you were here with me for a while, back when this candle was printing, or just throughout the month last month, you will have heard me mention this. If you were here back in December, January, you probably were here to also see me call this entire run lower. Think about this. We called and have been in line with DXY delivery since we were up here. We called it from this high all through this low, and then even now beyond the low. And again, you don't need to take my word for it. Nobody should take my word for it. Just go and watch the videos of what I was describing and talking about back here. It was beautiful, right? It was fantastic all throughout there. And that's, again, been the root of what we've been doing throughout the whole year so far. And a lot of it's been rooted and forecasted from timeframes like the quarterly, monthly, and the weekly chart. And then, of course, all the ones in between. Okay, so looking at current price delivery right now, and what we're looking at going into this new month, going into this new quarter. This is the current quarter, or the current, not quarter, but current monthly low here, or from the previous monthly low. So go previous. The hell is the previous month? Monthly low. Monthly high. So I also have this as a quarterly order block. Put that in the middle. Okay, so we're looking at this. We're watching what price is going to do here. So this is really all I'm concerned with. I can see there is a little tiny bit of this gap down here, a monthly fair value gap that is available. So we may look to want to purge that out. I like how that is coupled with a failure swing at the lows here. That means that, yes, we took liquidity over here. But I want to see if we're going to continue to be bearish and this quarterly bearish order block is going to hold and continue to push us down for a decent amount more time. This is definitely going to be something I'm interested in seeing if bearishness continues. But overall, essentially, this is all I'm really interested in observing. And then, of course, we can maybe add this as well for a monthly view, a monthly inversion fair value gap. Okay. And that will be all I will be looking for. Or that's all I'll be paying attention to when it comes to significant levels on the monthly chart. So, if we take that and then we move up a little bit, or down a little bit, we can now see this is not only previous week's low, but it's also Friday's low, if I'm not mistaken. Yeah, so that's the monthly low. So previous week's lows down here, and this is also Friday's low here. Actually, it's this candle. So if we move all the way down to this daily chart from the higher time frame we've just been observing, we can see how monthly low, Friday's low. So if it's going to attack this fair value gap that I mentioned from the quarterly time frame, if it's going to take this out, it still needs to break through some specific areas, and those specific areas are this monthly low / previous week's low, this Friday's low from last week, aka previous day's low going into Sunday and Monday. Okay, and then we also have this huge regular trading hours gap that price basically declined away from. We are inside consolidation, right? It's just the end of the month, end of the quarter. So as you could see, right, if we go back 3 months, so May, April, March. So March was here. Okay, March was in here. So this is going to be what the quarterly candle looks like. Okay. Let me turn this black. Just want to show you guys something real quick. So this is a quarterly candle, okay? Viewing it from this time frame, showing the significance of Power 3 and how it even operates on a 3-month candle basis. That's what the quarters are, right? There are 3 months in each quarter. There's 4 quarters in a year. So if you can identify, think about this. If you can identify what the quarterly perspective is going to be from a quarterly view, can you imagine being able to get in line with price and bias and narrative for 3 months like straight? Like know where price is going for 3 months at a time? Even 1 month at a time. Well, what we do here on the higher time frame is trying to afford you that skill set. So then when you're on the lower time frame, you can operate without being fooled just because price goes against you a day or two. All right. Again, being comfortable with these time frames, these higher time frames takes time, but I'm going to just continuously do what I do and show you guys like, hey, look at what could be possible using these higher time frames. Right, so this is the quarterly time frame because it opens here. Price declined, right? It reached down for this quarterly fair value gap. If you go back over here, I mentioned this quarterly fair value gap way up here as a target. And it's been declining, and we have been attacking shorts in the DXY, and that opinion to attack shorts in the DXY helped us also jump from the yearly bullish order block we identified on the NASDAQ and has served us well ever since in this rampage higher that's been classified for weeks as a market maker buy model in the NASDAQ. Okay? So, I mean, this stuff, it's so important. I'm trying my best to try to highlight the importance of this view, although it's something that will take you a bit of time to trust because it just takes time in reality for it to print out on the higher time frame for you to see it and start to trust it. But hopefully me letting you borrow my experience and opinion is going to help you really focus on these specific things, not only from liquidity to the different elements we talk about lower time frame wise, but on this higher time frame, because this is the foundation of what I do. This is how I'm able to call the market 75 to 91% for the last 3.5 years live in front of people. Okay? And again, don't believe the statistic. You stick around and watch. Calculate, right? Know every single day that I get it right. Every day I get it wrong. And just save it, and then over 6 months, get a percentage. And then you come back and tell me what you think the percentage is, what you calculated. And you'll be pleasantly surprised. What would be there would be no reason or zero confidence in me coming out here inflating something. I have nothing to prove. But what I want to allow is for the trust to be, offered to me so that I can help you. So then you can learn. The channel's not that big, and oh well. I'm not here to help everybody. I'm only here to help the ones that want to be helped. The ones that are gracious enough to give me their time. And that's the only goal. Because trading is all I can say is any goal you have, it's too small. So, you could use your imagination and think about that, right? So, but yeah, this stuff is so important. So looking at the quarterly view, again, we have the quarterly fair value gap down there. The reason I'm highlighting this is to show you 3 months, right? 2 of them delivered lower. The ending of the quarter, which is going into the end of the last month or so, obviously price ended up coming back, capping the overall delivery. So imagine if this was Monday, right? Rallied up, Tuesday, Wednesday delivered, and Thursday, Friday maybe hit a higher time frame PD or AM or trace back. It's the same dynamic. but we're just looking at this from a quarterly view, 3 to 4 month basis. Okay, and prices just, beautifully delivered through and closed off of the low that was created after it declined aggressively. And the bias narrative has been bearish. We have not called for buys in any long-term capacity. I even said over here, I said if this weekly fair value gap, which is in here, if that gets broken, if the order block here gets broken and we break above the high, that's the only time I will change my perspective, because 3 PD arrays need to be violated on the higher time frame weekly chart for me to change the narrative in general. Because it never did that, and it stayed below the levels I've been talking about for weeks at this point, we have been continuing to see price go lower and continuing to see the indices go higher. Okay, it's as simple as that. And of course, the way I do analysis is exactly what I've talked about today. Go to the quarterly chart, whatever is your higher time frame, go there, find the near-term highs and lows, where it came from, where it could be headed, find the close proximity PD arrays above and below, and work within that range, right? Work within the monthly range, the quarterly range, if you can identify it and it's reasonable. But make sure you go down further so then you can get closer to different liquidity pools like Friday's high and low, weekly highs and lows, daily highs and lows, monthly highs and lows. And then again, the extremes will be the quarterly levels. You don't care about what's up here. I don't give a shit. You don't give a crap about what's down here. Who cares? Only thing that matters is what's in here. And the only thing that, like this order block here, I could care less. It's too far from where price is at currently. What is in close proximity to price right now? This monthly inversion fair value gap, these new week opening gaps. Okay, this low here, that's pretty close. Friday's low here because a new candle is going to form. Okay, because this is Friday's low. A new candle is going to form. Friday's high and Friday's low. Those are the first liquidity pools it's going to have to target. If it's going to go here or if it's going to attack further buy side. Whichever thing happens, the undeniable fact is this previous candle, that range from Friday, the liquidity associated with it above the high and the low is the first thing price is going to have to target. And it's going to use it in some way. Maybe a new candle is going to form here. It's going to maybe wick above the high. Use that as opposing liquidity. Use this inversion for value gap on the monthly to decline, together with what I just said about this high. And then you use that delivery to then attack the low. Or vice versa. Maybe it purges through the low here. Maybe it stays inside these fair value gaps, because those are also close proximity. Maybe it stays above the new week opening gap in here. And then maybe it leaves this low, leaving a failure swing, and then just displaces higher, getting back above some of these levels up here to target buy side. Okay, great. Then we could start to look at this previous day's high. That's from Thursday. So that's a previous day's high, is it not? So even if this was the target, we'd still have this high, this high, this high, this high, right? And then all the different PD arrays in here to act as support in order to push us up, right? These are all more close proximity views than worrying about this solely or this solely. What's going to get you in price action before it gets there? You don't have to get in a move before that if you don't want to. If you want it to print a little bit more, so be it. But if you want to be a day trader and have more opportunities open up, this perspective is one way to do it. The way that we do the analysis overall is one way to do it. And if you want to be consistent and trust in the fact that your analysis should play out more often than not, do you want to build a unwavering, bulletproof ability to trust yourself, even if you were full-time and had to depend on this solely? That's a different mindset. There's different requirements for that. It's not just the 2022 model that'll get you there. There's a lot more required if this is going to be your business, your sole income used to provide for your family. If you put that much importance on it, and that's what trading is going to be to you, you would imagine that any justification for half-ass effort is completely reckless, especially if you want this to be something you can depend on, but especially if you want it to be something your family can depend on, because they will make you work for it to quit your job. You want to get rid of the structured work. You want to get rid of your job that tells you what to do and get you a consistent paycheck. You want to go do it on your own. You want to, have enough money to buy a home and do all these things off of your own skill set. If that was easy, everyone would do it. There's a reason that most people decide to just stick to a job. And unless you have these things behind you in terms of process, the right mindset, organization, in terms of how you're operating as a trading business, unless you have those things in order, unless you have the ability to desensitize yourself through fire, right? Through losing and overcoming drawdown and practicing those things and, managing risk properly and keeping things systematic opposed to how you feel, until you have those things available to you or developed in you, it's unrealistic to think anything further than, this is a hobby. Especially if some don't want to grind and think, oh, things are boring and, to tell me an entry. They're going to fail, right? They're never going to be successful, especially if they have this view of full-time trading as if, I'm just going to learn to do the YouTube model and then it's full-time. No, because it's a different story trading a demo or trading when you have a job or, trading with a secondary income. It's a totally different world when you're not depending on it. That feeling when you're a new trader and you take a trade and you're just on edge the whole time? Well, you'll get to a point where you'll know what you're doing, right? You'll figure out all the process and everything and all that, and you'll be like, oh yeah, maybe I could go full time, right? And then maybe you take the leap into full-time trading, right? And you're just like, screw it, I'm just going to quit my job. I'm just going to go head first. I just passed one funded account. I've had only 1 month of success, and I'm convinced, right? Maybe that's what they did. Once you jump into full-time, and now you know for a fact that your bills, your rent, your phone bill, insurance, car insurance, food on your plate, electricity bills, paying for your child, paying for this, paying for that. Once you realize that that's all going to be solely dependent on you as the trader making money and good decisions, you are going to hope and pray and wish to God that you focused on these boring things, because they're going to smack you in your face if you don't. Reality is going to hit you so hard that you're going to be wishing that you didn't say certain things were boring to yourself. That you focused on those things that you thought were unimportant at first. Because if you don't have things organized in a process, the systematic way that we do things. I don't take entries because I feel like taking an entry. I take entries if my system is performing and I see it in price. I don't care what's happened in my life. I don't care what's happened. It could be a tragedy that happens in my life. None of that relates to trading. This is a separate entity. Okay? It doesn't matter if I want to feel better, if I feel this I don't care. If the system doesn't work, or if it's not in play, if I can't validate using the processes I share with all of you, I am not taking a trade. Because that's the type of discipline you need. Because if you don't have it, I'm telling you, you're only going to be able to get to a specific level. And again, what I've just described to you is the difference that you're going to have to face from trading as a hobby, trading as a secondary income, to them trying to transition to a full-time trader. The difference in the gap in mindset that's required, in mental fortitude and mental trust in yourself and your system, the gap between those two worlds is magnified tremendously. It is so massive. And this isn't to scare you. This is to align your priorities properly. Because signal junkies and people that want to watch 2-minute videos and don't want to sit through things that I'm talking about right here, because they're focused on where's the NASDAQ going. Okay, like if that's their focus, I promise you, if anyone watches this replay and gets to this point and hears this, and you know, especially with you guys that are here already, but if anyone looks at this and that mindset is where they're at currently, you need to try your best to grow out of that, because you will never win. And if you do win and succeed and try, or at least you try to, and maybe you get lucky, that's all it's going to be. And to get there, though, the stress you'll have on yourself as a trader will be so insanely intense that you will probably decide that it's better just to go back to work. Okay? That's something, I have 6 friends that had that experience. I'm the only one out of 37 people that I started with that still trades, that's consistently making money, consistently able to help other people improve. I can't promise profitability because there's a lot of gray areas, obviously. But if you follow instructions, you have the best chance. But again, I'm the only one, because I was the only one, sadly, to accept this reality and focus on what I just described to you. How can I desensitize my view? How can I take my emotions away? Right? What if something happens with visitation with my child? What if something happens to my family member? What if something happens to this or that? Right? What if a catastrophe takes place? Will I be able to handle it and still make money trading? Or will I be pushed so far off the edge that my emotions just will not allow me to do this thing that I have grown to love so much? How can I prevent that from happening so I can do this and get to where I intended to get to, no matter what? It comes from what I've just been talking about. It comes from the things that I talk about all the time, every week, nonstop, especially to my private community students, especially to those that just reach out to me in DMs. I don't hold back just because you're not in my private community. If you ask me questions, you know, I'll help as much as I can, as long as my obligations to those that have invested in me to invest in them are fulfilled. But I'm always open to help. And I don't just talk to talk. I could be doing whatever the hell I want right now. Okay? Literally. Yeah, I don't have to be on social media. I will eventually not be on social media, because I didn't trade to have, you know, my time, you know, not be mine, right? It's all purpose in why I've started to trade, so I can be with my kid, my family, because life is short, you know. But again, I need to give back. I felt like I had to give back, so I'm going to keep giving back until I don't feel like doing it anymore. And that's not going to happen in the near future, obviously, because I have grown to really appreciate and have a lot of love for each and every one of you that support me. And a lot of you guys have become my really good friends, you know, from all different countries, all over the world. It's amazing, you know. So yeah, it's not going to stop. But to keep what I've just said in mind, okay, it is so important. See, we get excited through the possibility of trading, or the possibility of some stuff, this or that. But many times, the ambition, the excitement, sometimes it could distract us from the truly important things that'll get us to those goals and, you know, justify the excitement and why we started something in like trading in the first place. You know, the marketing is very convincing. That's one thing I will never do. And maybe it keeps my community small, because I refuse to do it. I'm not going to sell a dream more than it needs to be sold. I'm not going to give false hope, you know. And that kind of comes back to bite me when it comes to retention with students. But that's the thing. Those that have stayed, go look at the testimonials of what people say. Just simply from their time with me here, but especially in my private community. Go look at what some of them say. I've had 184 students come across me in the last 3 years. I've had 7 go full time, just from their time with me in my private community. But I've had 31 pretty much add another income and start making their way towards those bigger and more lofty goals. The rest are, they're progressing. Some of them are progressing a little bit slower, but that's the statistics. Some people don't listen. Some people don't want to take good advice. Some people just would rather, go against what it is that they're being taught, which I don't fucking understand. When they see me just coming out here, just smacking the market live in my private community, here on YouTube, I call it Sundays up until the rest of the week, and it beautifully plays out. So the evidence is there. It's just the personalities are a big impact as far as whether someone will succeed or not. And I feel like I do a pretty good job of combating any issues because, I'm a very personalized, focused, trading mentor. So if you have one issue, I'm going to help you fix that issue. If you're good at other things and you just need one thing, we'll focus on that one thing, and we'll figure out and discover what the problem is. And I have that list of 10 categories to trading mastery or trading development, the roadmap I have in the free community, the outline at least, and then more descriptive in my private community. But every issue you have gets ran through those different topics, so you can figure them out. Place wherever the issues are, so then you can figure out a process. I can give you a drill to fix it, but it all takes time regardless. But success in trading is, again, depending on what your goals are, is going to come from a multitude of different things. Your ability to be disciplined, your ability to stay organized, your ability to think positively through difficulty, your ability to continuously try to improve yourself, find something that works for you, don't overcomplicate things, gaining experience. You can't, people could try their best to, try to transfer the experience. I try my best, but there's a lot of things that require experience, and the best thing that traders can do that are new is to shadow somebody, or just kind of do like an apprenticeship type of vibe, which is kind of how my private community is. And just shadow what they're doing, shadow their mindset, think about what's happening, compare it to yours and see where you can improve. And that is one of the best ways, I feel like, for those of you that do want to end up being really excellent, becoming really excellent at this. That is one of the best ways you could do that. And that's why I run my communities like that, my private community specifically. It's basically an apprenticeship. You show up, you watch, you ask questions, you get specific personalized videos from other students' issues to your own issues, and it's a group of just amazing traders, from 18 to 45 years old. I have a 65-year-old that trades in my private community, which is wild. It's amazing. He's a testament. I have a couple that are above 50, and they're a testament to the fact that it's never too late. If you're young and you think it's not happening fast enough, think about them. Is it really too late? Or are you taking too long? Really? Right? Tell that to some of my students that are over 50. They're like, I'm obsessed with this. I love this. So think about it, right? It's never too late, and you're already bit if you understand what the opportunity is. You'll never be able to go to work and think, oh well, I'll just quit trading. You'll never be able to sleep or deal with it. It'll constantly be gnawing at you like a dog with a bone. So you might as well just roll your sleeves up, keep showing up, and dealing with what you got to deal with. Okay? So yeah, very important stuff. Okay? And yeah, so don't forget what I said about the quarterly view, Power 3, how each quarter has its own place. In the weekly range, each week has its own place, and each day, each segment of time within the day has its own place. The sessions have their own place. Okay, so again, unless this changes, unless we displace higher, break through the highs up here, I'm not going to change my opinion. We're going to continue dropping. Hopefully we could see the yields continue to decline, right? Hopefully it could just continue to drop. That supports downside for the DXY, and hopefully we could see this expand higher. Hopefully we could find evidence for it to continue and try to do that, because then it'll finally be out of a broken correlation and it'll be back into positive correlation with the indices and the foreign currencies. All right, so yeah, let's go move up. So yeah, that's interest rate markets, currencies, including the DXY. I'm gonna be looking for this to continue going lower. Maybe seek the sell side here before it does that. Friday's high and low. After it hits, one of the Friday's highs or Friday's low, we have the previous day's low here, and we also have previous week's low, which is also the previous month's low as well from May, if I'm not mistaken. Yeah, it's the monthly low. Okay, so this is our current range to work within, aside from the quarterly high and low. We have the monthly highs and lows, and then we have the weekly highs and lows, and then we have the daily highs and lows. It's like you're just zooming in to what's important, like you're tightening the scope or focusing the scope on the headshot as a sniper, right? In terms of where you're trying to locate your target, and we basically located the target, or what to target, down up into here using this process. Very simple. I don't have 1,000 PD arrays marked. I have a decent amount of new week opening gaps shown, but that's, it's just helping us confirm consolidation, helping us confirm dynamic support and resistance, and different levels. If they overlap with certain things, we're able to then use them to justify moves in particular directions at specific times. Okay, so yeah, I hope this makes sense. My overall target is going to be down here. We'll see if it could try to blow that out. So we're going to keep that there. Let me throw an eyeball here too. I would really like to see us try to drop. We'll see if it wants to do that or not. See if that can be incorrect or correct. It is, again, in a range-bound environment, so we'll see what happens. The Kraken correlation hasn't stopped the indices from going higher and doing what it's been doing. So again, we'll see what it wants to do. I would really like to see us move higher. But again, I'm only going to be justifying buy-side overall delivery for this if we break through these levels. And I'm only going to be able to justify downside delivery if we start to break through these levels on the yields. Remember, the yields dictate where the DXY is going to go, and the bonds dictate or influence where the foreign currencies like GU and EU are going to go, and the indices where they're going to go. Okay, so just to make sure that is clear. So again, we're looking at the NASDAQ now. Finally made it, all right. But had to talk about some certain stuff. So hopefully you guys don't discount what was just mentioned. Otherwise, you're going to eventually have to learn it, but you might as well learn these hard lessons early. Okay, so what was that? So yeah, we got equal highs up here. I don't think that this is going to stop. We had this bullish this bullish weekly candle here. This is what it looks like if we look at the weekly candle here. Well, actually, this is the monthly candle. Okay, so see the wick here, see the wick there. If we go to the daily chart, come back and look at our beautiful little candle. It's pretty much what it looks like. Go to the monthly, right? It's pretty much, give or take, what it looks like, right? It's the overall delivery is pretty much depicted there. So I'm going to look at this order block here. So I'm going to do this one pretty quick. We have a lot of back end information, so now it's just going to make this a piece of cake, where is it? Previous daily order block. Okay, so there's a daily order block, fair value gap in there too. It's a daily fair value gap. We have this weekly fair value gap I've had outlined for a while. If we could just pull that up. So we haven't really went down there, so that's a solid sign for us to continue wanting to go higher. If we do look at the 2-day chart, we do have fair value gap in here that's been pretty solidly respected. It did trade through it. All it did was reach down to this further fair value gap. I think I'll incorporate that as well. But it basically wicked down there. We've been calling for this. Go back to some of the videos. We called for this type of behavior to drop lower then go higher. Pretty much worked out. And then with my private community, we navigated this entire consolidation on the live calls we do on a daily basis, 5-6 days a week for the most part. And we can now see that. Let me actually remove this real quick. So yeah, we can see that this run above the highs here. Let's go drop down to the other one. So there's failure swing. I still do see the buy side available. I don't think that we're entirely done. We have relative equal highs here, relative equal highs here. The only way that I would start to consider that this is going to possibly change and maybe start to dig a little bit deeper sell side is if we end up breaking through or staying below this fair value gap and breaking through the low here. That would be the only way that I would be comfortable looking to try to short. And it may happen, right? It may look to want to dive down a little bit. If we go to the weekly chart, take a look at what it looks like here. Maybe it wants to dig a little deeper to start the month for manipulation. But again, as long as we can stay above like this gap in here, I wouldn't have really much of a problem with it trading or trying to attempt to trade down into this wick in here. Again, I would prefer it just to stay above these areas though. I'm not opposed to them trying to send a wick down below this low and then maybe look to pull up aggressively, then transition and go higher again. Nothing in here showing us bearishness. Yes, it purged through this low, but again, we'd have to do some serious closing below this low to validate whether price is going to continue dropping and disrespecting the buy side. Otherwise, it's going to just use this and continue to want to go higher. We got relative equal highs up here. There's that failure swing in here that led to this retracement. All that again has done is reach down into these lower levels in here. You take this low to that high. It was an optimal trade entry, stop run. And again, we have to see this stay up or stay available and not targeted on a closing basis in order for me to continue to want to support buy side. Otherwise, if it was to break that, I would then look to try to target something down here. But that's a contingency. We're not favoring that right now. If it does get down there, we may look to reach into here though. So just, completeness sake. But going into this new month, going into this new week, I want to see us try to continue to attempt to get up to the buy side. If we go to the weekly chart, we see this weekly order block. I would like to see us try to trade above that, come back and use that as support, and then set us up for another leg higher. So that is going to be something that I'm going to pay attention to. That is my sentiment. Again, it's a new month. It's going into a new quarter, so don't be overly demanding for price to just start continuously accelerating. Like, we are going to see some manipulation to start the quarter, to start the new month. It's just going to happen if we're going to be bullish or bearish, right? It's going to have to, it goes against it for the most part on a regular basis, regardless of what direction you're favoring. It's going to have to give you manipulation. So expect that going into a new quarter, new month, new day, new week. Okay, and then see how all those things can fit together to build your picture, right? So again, this is a previous week's low. We got the previous week's high up here, so those are our near-term liquidity pools. Then we could take it from the previous week. This is the 2 weeks weekly high and low. This right here is the previous most recent low and high for the week. So those two areas plus these two areas are the two liquidity pools aside from Friday's high here and Friday's low, and Thursday's high, which is a weekly high from last week, and Thursday's low. These are the near-term liquidity pools, like we've been kind of talking about in terms of navigation for what's important. And if we go to this weekly chart, right, we get this volume imbalance, which is a new week opening gap. It's staying above that. Hopefully we could continue to do that. Excuse me. If we can stay above that, that's one of our levels of importance. We have this order block here. We have this volume imbalance. I'm assuming that that is also, yeah, it's also a new week opening gap in there. We have a new week opening gap in here at this gray area, right? The close up here and the open, that is a new week opening gap. The close here and the open, that's a small little new week opening gap. It's overlap with this one, so we don't have to put it. Obviously, we could just, if you get this indicator, which is the, where's that? The weekend day separator, and just get it for Saturday and, or for Sunday, and make it a gray color, you're able to then quickly be able to identify where Sunday is at, and then you'll get to visually see new week opening gaps very, very quickly. You don't have to spend too much time. You don't even really got to go in and mark off the levels if you don't want to. I only mark off certain ones. I have the rest of them written down, but I don't even have to do that because we have this indicator, and it kind of just shows us what's what, right? So yeah, so going into this new week, new month, new quarter, we're going to be watching this here. We are overlapping. It's a consolidation, right? Overlapping higher time frame candles. So we are in consolidation. It is currently high resistance delivery, currently high resistance conditions. And if you think about what I talked about in terms of equilibrium, you go from this high extreme to the low that took sell side, that one that took buy side most recently. We're inside equilibrium. And what is it doing? It's just going sideways. What is that also followed by? It's followed by the start of a new month, start of a new week, heading into a new quarter. So one last rule for the quarter analysis that I want to share with you guys. I've shared it before, but when you go into a new quarter, similar to a holiday, how we do the day before, day of, and day after is classified as low probability. Well, the week before, the week of, and the week after a quarterly transition, those are classified as high resistance, classified as going to be a harder condition to trade. So we can already see visual evidence of that being the case, given the fact that price is already consolidating going into a new month. We are at the point where this is the week before the new quarter. Okay, as far as I'm aware, yeah, because in not next week, but the week in 2 weeks, we're going to be really close, if not already starting the new quarter. Okay, so we're going to keep our eyes on bar chart, see when the transition fully takes place. It's anywhere from the 14th to the 16th, sometimes 17th, sometimes it stretches out for whatever reason. So keep tabs on that. But this is the current condition. This is the overall view. Okay, this is what we're looking at, just in general. Okay, we got this low, that high, right, for the NASDAQ. Take the low to the high. Where are we at? Oh, ironic. We're at equilibrium, and it's consolidating. Isn't that ironic? Right? So all the same things I just talked about on the Dow, they're all applicable to this chart. So I believe that we're going to have the same stuff taking place. And again, unless this low is completely violated on a closing basis, I'm going to look at this as a fair value gap, an order block, another fair value gap. Price is just accumulating in here and should eventually be able to rampage higher and take off. I've been talking about this too. Label this real quick. I've been talking about this market maker buy model. Okay, and this is a second stage distribution. All right. So first stage distribution was down here, beautifully delivered. We've been talking about this entire run. I've talked about so much and taught about so much in here. I mean, it's highly advised that you guys go rewatch the videos and try to pick some ideas that you hear me talk about, and then try to dissect them yourself. But then also, you can come and ask me questions about it, because I prove it so much. The only thing that I don't do is shove my finances down your throat, which I'm not obligated to do, and I'm not going to do. Just put 2 and 2 together. Okay, if I'm hitting it 70 to 80%, and I have students that are crushing it, I mean, I show the financial levels, like what I'm able to knock down 3 times a year. Once in January, once in September, and then one towards December. Sometimes November, because I don't really like to trade in December. But I scatter it around because it's not the focus. Okay? That's the only thing that I don't do that everybody else does. Right? And it's unfortunate that, that's like people want to pocket watch when you could just hop on live and see me do it in front of you. I show the live account. I show the amount of trade, so I'm not over trading and being a dumbass. So you're gonna have to put 2 and 2 together. But those that do put 2 and 2 together, those that spend time here, follow instruction, they see what the vibe is. And I'm grateful for them doing so, because I see them succeed. It's amazing. That's the whole point, right? So yeah. But yeah, this is what I'm looking at. Fairly straightforward. Looking for buys. I'm allocating flexibility to the fact that price may want to dig lower, sweep the low out, then go. I prefer it to stay above this order block fair value gap, other fair value gap, above this second stage distribution, which it has beautifully done so far, which again we've been talking about for weeks. Now we're finally here. So this should be able to quickly, it shouldn't be able to spend time in here too long. It should eventually, maybe it takes like, a couple of days or whatever, or maybe even one more week, given the start of the new week. Or maybe it goes into NFP, and NFP is going to be the thing that's used to blast us all the way up here, which I wouldn't doubt. Because remember, higher time frame charts, higher time frame price delivery needs to use institutional sponsorship to move, because it's so much money that's required. And many times something like this being coupled with something like this, these equal highs, coupled with NFP or CPI or FOMC or any other big time news event, a lot of times this will wait, accumulate, since we're in a market maker buy model. And then once that news comes out, maybe it wicks through this or tries one more time, fails, and then gets sent higher using the news events as a macro in terms of timing for the delivery of a higher time frame target to or from a level. So we could do it from here to these highs up here using NFP. So that is what I'm going to have in my radar. That's what I would like to see. If I can get that to show, you can you can definitely expect me to look for some snipes in that, because that will be an amazing run. I mean, how many handles is that? That's like 1,500 handles. It's crazy. I mean, even half of that will be okay. Maybe it would just only do half. Who knows? But getting even up into this level would be justifiable. Okay, so yeah. So I guess we will put a ribbon on it with that. Freddie, I appreciate you sticking with me the whole time. I hope you've learned some stuff. Again, send me screenshots of how you're journaling, and you can always ask me questions. I'm always here to help. And again, I do have a private community. If you later on want to join that, that's always available. So just let me know if you have any questions about that. Otherwise, I'll keep seeing you here, and maybe that's going to be enough. And I'll do my best to give you as much insight as possible. But yeah, I'm grateful for those of you that do spend time here. Please don't discount anything that I've mentioned today. If your goal is to be a full-time trader, please listen to what I said earlier. Rewind, focus on what was mentioned, because yes, it's a reality check, but it's something that you need to something that you need to accept. Okay, it's not a negative thing, it's not a positive thing, it's just a reality thing. And as long as you can stay grounded in reality, as long as you can stay patient with yourself, as long as you stick around the right people like you are here currently, as long as you keep watching ICT's videos, keep showing up every day even when you don't feel like it, doesn't mean you take trades. If you don't feel like looking at the chart, don't take a trade. Just don't. It's not worth it. But yeah, just stay very conscious of what you're doing. Just try to be as organized as you can. Remember, this is a lifelong skill, and if you're here for the long haul, and if you're really young on top of that, be gracious with yourself, because your family won't be. When it comes to this, nobody will be unless you're with like-minded people, which is why the communities, joining a good community is so important. Because you can have that outlet to talk to people who understand, get guidance and things like that. And you're not being forced into a mold when you're here. When you go to anybody else, aside from ICT, most of the time they're going to try to shove you into a mold, unless it's only a handful of the ICT students that take that seriously, and they have a private community or whatever. Most of them don't. Most of them will try to force you into their model. That's not how you're going to learn, okay? Because what works for me may not work for you. Some stuff may work, some stuff won't, because we're all just different people. Maybe you're a swing trader and I'm a day trader, so there has to be an adjustment there. And most people are not willing to make that time, make that personalization, that personal focus into their students. But that's just not the way it is here. Okay, each person is special to me. Each person is special in their own way when it comes to trading, and they have to be treated as such. And over the last 3 years of me basically sharing my insights and helping others, I've seen that is more important than ever. Okay, because you want to feel like you have something that's yours, and as long as you're with the right people, you're then able to get to that point and make your own special model. Even if it has a lot of similar elements, it'll still be personal, and you can end up being proud of that eventually. Okay, and have something that is entirely yours. All right, and you're welcome, Freddie. It's my pleasure, bro. I appreciate you sticking with me. It's not always going to be sunshine and rainbows and unicorns and whatever. Okay. Sometimes it's going to be reality. Sometimes it's going to be technical. Sometimes it's going to be, things that you need to hear versus what you want to hear. And that is what I'm on social media to do. I'm not here to build this false image. I'm here to spit reality facts and, try to harden those that truly want to be successful in this industry, because I know what works. I know what worked for me. And now over the last 3 years of teaching others and watching them succeed through the time being with us, I've also learned what it takes to be a mentor and get others to succeed. Okay, so yeah, definitely take the stuff that I say to heart. Some stuff will be useful to you and relevant to you. Some stuff won't, but you're going to have to be the decider of that. But yeah, so at the end of the day, just keep showing up, and I'm sure you guys will do amazing things, as a lot of you guys have already been showing me you're doing. So yeah, again, thank you guys for the time you've spent. Hope you guys got value today. Definitely don't forget to like the video and share with anyone you think can add to the conversation or can get value from what it is that we do here. And yeah, and I guess I'll see y'all on Tuesday here on YouTube. But if you're not in my free community, my Discord, definitely go join that. And if you want even further mentorship, more support, more access, more of everything in terms of your learning, I do have a free or a private community you can go look into as well. Links in the description. It's not for everybody, but if you check it out and think it's for you, we can hop on a call and have a conversation about it. But yeah, so with that being said, hopefully everything has made sense. Again, we're going to look to see if NASDAQ can look to go higher, allocating some flexibility for it to want to dig lower a little bit, considering manipulation. And our invalidation level for this is going to be this level down here. Okay? Because, I mean, it could dance around in here a little bit longer. I'd be cool with that. But I really, really don't want to see it come all the way down to here. Because that would be clearly breaking through what I'm trying to see in terms of going higher. Right? So, yeah. With that being said, you guys, God bless. I will see y'all on Tuesday, like I said. Join my free community on my Discord, or free Discord if you haven't already. And yeah, I guess I'll see y'all on the next one. God bless you guys.